Now we know that Aron has proposed a new share issue of over 400 million APE shares. We do have some kind of idea how this will impact the APE stock, as these shorts will be forced to buy up these new shares in the open market to convert their synthetic short positions into legit shorts. But what if there was a way we could have a trial run to determine the actual price impact? Well, it turns out that we do. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, as Tendy Baron tweeted just in, Bed Bath and Beyond have just completed their share offering of 12 million shares. That means Bed Bath & Beyond has just issued 12 million new Bed Bath & Beyond shares in the open market, and it's likely the shorts will be buying up all of these shares. Now I think it's important to note, even though Bed Bath & Beyond is indeed a meme stock and similar to AMC and APE, it's not exactly the same. For one, they've got a significantly smaller float of 77.4 million shares. On top of that, they've just issued 12 million shares, which is only a small portion of the overall float of 77 million. We know that Aron has just proposed over 400 million APE shares, which nearly doubles the size of the APE float. 12 million as a percentage of 77 million is only somewhere between 15 and 20% of the float being issued again, whereas obviously 400 million as a percentage of 516 million is significantly larger. Now therefore it's likely when Aron does sell off these new 400 million shares, it will have a significantly larger impact than the Bed Bath & Beyond issue. However, Bed Bath & Beyond is still heavily shorted, with 37.9% of shares outstanding actually shorted, and 106% of the overall float shorted as well. Again, I think it's got to the point where this data is all just entirely rubbish, as I don't know how they've got 37% of shares outstanding shorted, but 106% of the float. Considering the float and shares outstanding is very, very similar, it makes more sense there's actually 106% of all shares shorted and not just 37%. We know that with AMC, even though the data shows 20% of the float shorted, we know that it's more likely the float is shorted 2, 3, or 4 or 5 times over. And therefore I think these shorts will be more desperate to buy APE shares than they are to buy Bed Bath & Beyond shares. Therefore I do think the buying impact and the price impact will be larger when the APE shares are issued than what we've just seen with Bed Bath & Beyond. However, saying that, as Bed Bath & Beyond has just completed their share offering, it means they were offering and selling these shares yesterday. And yesterday, Bed Bath & Beyond saw a whopping 24% gain. On Monday, there was only 9 million shares traded for the entire day, and yesterday on Tuesday, a whopping 51.8 million shares. That means all of those new 12 million shares were traded yesterday, and it's likely a number of trades were taking place between retail investors and hedge funds as well, causing a 51 million share traded day and a 24% gain. I think it's also very, very interesting to see what's going to happen to the price action today, for the remainder of this week, and over the next few weeks as well. I think it's likely we'll be seeing more green days for Bed Bath & Beyond as a result of this share issuance, and that will only be amplified for the AMC APE issue. I think considering AMC and APE are shorted significantly more than Bed Bath & Beyond, and Aron is issuing significantly more shares, I do think we're going to see a sizable difference to the Bed Bath & Beyond gains. But on top of that, as Tendy Baron tweeted, he said Bed Bath & Beyond has also authorised a new 150 million at the market offering programme. That means they're also going to issue an additional 30 million shares for $150 million, potentially over the next few weeks. Now obviously issuing 30 million more shares is sizably different to the 12 million shares they've just issued, and again it's likely they're going to see more and more gains. I think if AMC sees daily gains of significantly larger than 24%, similar to what we saw back in June of 2021, I think that it could certainly cause the squeeze. Also guys, be sure to join the free Discord linked in the description below. We've got 1348 indicators and we talk about AMC news and due diligence all day long. And if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 15 free shares worth up to $2,000 each, a whopping total of up to $30,000. And in terms of the potential AMC merger between either Netflix, Disney or even Paramount, Crystal Ball asked the question saying what happens to naked short positions when a merger is completed. He said the FTDs actually come due and must be forcibly covered at the time of the merger. Maybe this is Aron's plan. Now somebody actually called Fidelity and got the answer straight from the horse's mouth. He said the result is that legit short positions are marked at their notional value, there is a small fee paid to the brokerage to cover the cost of the transfer, and the position is moved to the new ticker or new CUSIP number. Essentially, the net result is that legit shorts stay right where they are, minus a tiny one-time fee that's barely worth mentioning. Nothing really noteworthy happens to the legit shorts, which there are few of. As mentioned, however, naked shorts are different. The short seller and or the broker who issued that naked short is on the hook for whoever bought the share that was borrowed. In this case, it's unclear if the broker or specifically the short seller is responsible for delivering this share or for buying it back and cancelling it, but I'd suspect it was the broker who accepted the borrow fees in the first place. Now that means the broker could recall the shorted share directly from the short seller to cover their position and obviously close out of that synthetically shorted share. But he said the rules get extremely murky here. He also said FTDs or failures to deliver come due at the time of the merger and so must all be settled by the merger day. That means that if AMC did potentially merge or be acquired by Netflix, Disney or Paramount, all of these naked shorts and these FTDs, like the APE FTDs we saw last month, would have to be covered. As Crystal Ball tweeted, he said AMC preferred equity units or APE shares do have voting rights, unlike most preferred shares. So, if there was a takeover of AMC, would the acquiring company have to also acquire all of the APE shares too? And therefore, if that acquiring company is acquiring both the AMC and APE shares, surely that means the APE FTDs would also have to be closed out. This screenshot says as preferred shares are generally not voting shares, it is not necessary the purchaser redeem or buy them when taking over a company. But considering the APE shares are indeed voting shares, that means surely an acquiring company must also buy the APE shares as well, forcing the FTDs to be covered. Now on top of that, I think we've also got a number of separate catalysts all lined up that suggest the AMC squeeze will be coming soon. This article from Buy Dips Sell Rip says the volatile stock market is in full swing. The market seems to be shifting bullish over the last few trading days, but the data shows something else could be brewing. This is a chart showing the S&P 500 put volume that shows through January 2022 all the way to right now in October 2022. The number of puts in the open market has increased significantly. Obviously back in September we did see a peak in these put options as the market had bottomed out temporarily. We saw the put options decline, but again they're now back on the run again. On top of that, as I mentioned in my video yesterday, we're seeing a significant amount of hedge fund outflows. As I said yesterday, in Q3 we've seen $26 billion flowing from hedge funds back to investors. And again in the second quarter we also saw withdrawals of $27.5 billion. It seems at the moment these hedge funds are losing nearly $30 billion per quarter just from withdrawals. And we've also got AMC's Q3 earnings being released on the 8th of November, the day after these bonds are falling due on the 7th of November. But I think that's a video for later. Now on top of that, we've also got the market crash, and as Ponzi Finance tweeted, they said in 1987, the Dow Jones dropped 23% in a single day. An equivalent crash today would be 7,300 points. They said it's always smart to keep downside possibilities in perspective and never be too complacent. I think this just goes to show a Hail Mary crash in the S&P 500 of 10% in a single day is absolutely possible, if not even probable at this point. We could even see the S&P 500 crashing by 23% in a single day. Over the last 10 months, the S&P 500 is down around 25%, but that drop could double in a matter of a single day. Now, as I've said before, a crash that significant would certainly cause a massive wave of liquidations among practically every hedge fund. Now, from that first wave of liquidations, we may see some hedge funds trying to pass their short positions onto surviving funds, but when the second wave hits, it's game over. When that second wave of liquidations happens, these liquidations will impact even the largest of hedge funds and even the safest of hedge funds, let alone the most over-leveraged. That means we're going to see tons of AMC short positions being closed out all at the same time, causing the squeeze. As this tweet says, they don't want it to crash because the mother of all short squeezes will happen. Prove me wrong. And finally, as Unusual Wells tweeted, they said Wall Street bonuses are expected to slide by 22% this year. Considering these hedge funds are approaching closer and closer to that liquidation point, they simply can't be affording to pay their staff good bonuses. Now obviously it serves them right for the amount of manipulation and crime we've seen over the last year and a half, nearly 2 years now. Hopefully when this is all said and done, it will teach these hedge funds a lesson about not creating synthetic shares, about not trading illegally and manipulating the markets, and not taking heavily over-leveraged short positions. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.